Half an hour from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne with David Ingles.
Good morning. Let's get to your top stories today. The dollar rising after another record close in Wall Street. You have traders across the world awaiting really this parade of economic data coming through. Earnings as well from some of the world's most valuable firms.
Investors also cheering the talks between Washington and Beijing in Sweden, with Commerce Secretary Howard Lutnick saying a 90-day tariff truce extension is the most likely outcome.
And you have Thailand and Cambodia agreeing to end 5 days of fighting after President Trump threatened to withhold trade deals. Good Tuesday morning. Welcome to the show. It's red across your screens. If you're outside in Hong Kong walking in, it is a red rainstorm warning as well. Coming into this Tuesday morning, 0.6% is the early damage across the benchmark. Keep in mind we're coming off successive weeks of a fairly decent run in the momentum going into this week. The yen, well, not the yen, the Topix index is down about 0.9%. The Kospi index was down by much more, in fact, earlier on, which was leading, I think, to some of the declines. And as you can see, it's clearly come off the lows of the session. U.S. futures, bottom of the screens, are seeing a bit of a bounce right now. We're looking at this big move in the dollar on Monday. Less so right now, but certainly when this next board comes up, you'll be wondering why we're trading at these levels for several exchange rates. For one, I think it's 7.18 on dollar China. You have the Aussie, of course, which did see a significant drop. It did bounce, though, off that 50-day moving average. The weekly resistance, you just saw, I think, on your screens right now on dollar yen, 149.63, if I remember correctly. That's the weekly top in terms of I think that's a 200-day moving average as far as that's concerned. Oil, speaking of something that's been on the way up, oil is back above 70. I'm talking about Brent, West Texas on your screens coming shortly. Fidelity, I think, has a call on gold at 4,000 that's coming up shortly. There we go. 4,000 is possible on the back of some of the macro assumptions bottom of the screens there. Going into the China Open today, we're looking at things like turnover. There's one other metric that we haven't really revisited in a long time, but more so now. Margin debt is actually extremely close now to topping the highs that we saw this year. Beyond that, we're back to 2015 levels, and I think something special happened in both ways, both directions, of course, that year. But yeah, we're going into the Open today. Markets are consolidating.
As you mentioned with the dollar, right, this sort of brief sort of short squeeze, maybe you can call it, but it's interesting, right? Stan Charles, Stephen Ingles talked about the fact that we now have this EU-US trade deal. Perhaps that is the end of this run of good trade news that we're going to get. That's why we're seeing sentiment cooling here, and maybe that's going to continue to maybe not weaken the dollar anymore, right?
Yeah.
Perhaps we're getting to the end of that kind of weakness in the dollar. And any sort of surprise domination of the Fed, that might be the only next catalyst in the near term, they say. Yeah,
and to your point we were making yesterday, right? The Fed's a big one to watch this week, and certainly how the voting's going to turn out and whether that's going to become a sort of them putting out their calls on not the economy, but almost like a job audition, right?
They said, Stephen Ingles said, it's not ironclad, the case for cuts right now. There's a reason, but maybe not something too set in stone.
Well, it's certainly one thing that we'll be tracking going into today. In fact, Alexis Crow, the chief economist at PWC, will be joining us this time in the next hour. Other things we're tracking, we talked about the dollar. Within the Chinese markets, childcare subsidies, of course, so we're looking at everything from consumption. Does it benefit the birth rate, or does it benefit initially consumption is the other question that's being put out there after they rolled out the detailed stimulus, the detailed annual subsidies, to be more specific.
It seems to be more the consumption side, maybe, right? Because you talk about all these structural things that are dealing with the declining birth rate. When you talk about $500 a year per child under the age of 3, not sure if that's really going to get people to start making babies, right? So certainly that's one thing to watch. But then again, you got to talk about, it's one of the rare sort of signs of stimulus, apart from what we saw maybe a few months ago in terms of cash handouts, right? That we're seeing for first time in a while. So maybe there's more there than we're talking about.
Yeah, okay, so we'll see what markets think about that. In fact, I think you did already get somewhat of a reaction towards the close in the onshore markets yesterday. The floods, of course, in Beijing. We'll get you an update on that. Certainly, we do have now, unfortunately, a casualty count coming through. More on that story in a moment. But yeah, apart from that, we're looking at a fairly quiet session across equity markets, 0.3% to the downside, going into further talks in Sweden.
Yep, day 2 in Stockholm. And we did speak, or did hear actually, from the U.S. Commerce Secretary Howard Lutnick. He's saying that President Trump will decide if Washington and Beijing will extend their trade truce by 90 days. Now, Lutnick told Fox News an extension is likely.
They're talking right now, but the decision maker, of course, is President Trump. I'm sure the people who are speaking with China are going to go discuss with President Trump how he wants to play it. He's got an excellent relationship with President Xi, and I think we'll leave that to Donald Trump to decide how he wants to do it. Is that a likely outcome? Sure, it seems that way, but let's leave it to President Trump to decide.
Let's bring in our China correspondent, Min Lo, and talk about the first day and what really came out of it. It seems like sentiment is still looking pretty positive.
Yeah, but expectations still quite low. I mean, it's basically going to be status quo right now. Howard Lutnick saying that we are likely going to see this trade truce extending by 90 days, basically giving both sides a longer runway to work out the details of a more comprehensive trade deal. And bear in mind, President Xi and Trump are hoping to meet later this year. And given how Trump loves his showmanship, it's possible that both sides might leave the details of a big win to be announced by the top leaders themselves further down the road. If they do get to an agreement above and beyond that trade truce, that will be very welcome by investors. Of course, a lot on the table, from Chinese purchases of oil, from Russia and Iran, to the lowering of fentanyl tariffs. Howard Lutnick mentioned wanting China to commit to purchasing a certain amount of agricultural goods. They also want the flow of rare earths to continue as well, and the overcapacity issues. But it looks like the U.S. right now is also playing it very safe. We saw reporting from the FT, for example, that the Commerce Department has received instructions to freeze some of these export controls that could potentially derail talks. So it looks like, they're really being very careful to ensure that nothing would derail the potential meeting between the two leaders.
Speaking of something that possibly is derailed, what do we know about the Taiwan president's trip that is reportedly being canceled because of trade talks?
Yes, so the Taiwan President Lai Ching-te was supposed to visit some South and Central American countries with a stopover in New York and in Dallas as well. But we reported earlier that the U.S. was mulling canceling this trip, and the FT now confirms, based on their sources, that the U.S. has canceled that trip, likely because of the sensitive timing here while the trade talk with China is going on. Of course, we know Beijing has always been opposed to even any informal exchanges between Taiwanese officials and U.S. ones. And if this trip were to happen, it would have been President Lai's first trip to continental U.S. as the president. It's also, of course, coming as Taiwan is also hoping to reach a trade deal with the U.S. to lower tariffs, which is now standing at 32%. So again, it looks like people are all walking on eggshells and to ensure that the trade truce would continue for another 90 days.
Min, thank you so much. Min Lo, our China correspondent there. Let's bring in Taosha Wang, portfolio manager at Fidelity. She is with us here on set to talk us through all things markets and implications of what's going on as far as trade negotiations go. Good morning.
Good morning.
Markets have done very well, maybe because of or despite of trade talks. Are you surprised to the extent that this rally has actually run?
Well, I do think the tail risks related to trade tariffs have being curtailed to a great extent. We have quite a few frameworks with major trading partners in place, with Japan, China, EU, obviously, most recently. So I think the ability for trade headlines to really move the market, particularly in a negative way, has become, a less likely scenario. On a forward-looking basis, we started to see, more common ground between China and the U.S., and hopefully, the trade talks are progressing into more technical details, and they're being handled carefully by experts.
And you've actually continued to add on to your U.S. equity views in the last few weeks or months.
Yeah, so we have maintained the overweight view on the U.S. I mean, I know this year so far has been so much debate on U.S. exceptionalism, and I think that a fair way of saying that is that the U.S. exceptionalism debate applies more to the dollar as a currency than the U.S. risk assets in general. And I think, we're still early in the earnings season, but we're seeing, generally positive earnings backdrop. Investments continue, especially in AI. The application, the investment, the technology continues in a very dramatic, very fast manner. I think there's still a lot of, strong long-term reason to be positive on U.S.
Right. And have you added or maintained your exposure going into the earnings season? Maintained it. Yeah. Okay. And what expectations do you have? Because it's extremely important next few days as far as big tech. I know you have some views on AI as well.
Well, I think while it's always difficult to pinpoint exactly what's the earnings outcome, right. We think that, for example, for big trend like AI, we continue to see, a long-term positive in its trajectory. We see that technology is still getting better and getting cheaper at the same time. The use of it is getting wider, so broadening and deepening at the same time. We see companies using it not just for one or two individual, business lines. They use it in, multiple verticals across their businesses. We're certainly seeing really big AI investment numbers. 300 billion capex into AI, in 1 year. That's like equivalent to 1% of U.S. GDP. So the magnitude of that number is not just, moves the company earnings. It moves the macro picture as well, together with the multiplier effect of that investment.
And how do you trade that theme still, this AI theme? Is it still through chips?
I think chips is still by far the most reliable way of doing it. Chips have their own cycle, and I think the cycle is still in a sort of an up cycle. It's the part of the value chain that has the deepest moat, so the barrier to entry is the highest. There are obviously other way of doing it. The key is that the investments need to turn into applications that enhance the productivity, the commercial aspect for individuals and companies alike. Well, we are seeing that happening.
What about the energy component of running AI? That seems to that was an angle that came up when NVIDIA a few years ago, but has now I think returned. And I wonder how you're looking at that.
Yeah, I think the energy angle is a very significant part of it. Our favorite way to play with that is through the uranium theme. So the nuclear power generation, uranium is at the crossover of so many themes. AI with its immense energy needs, national security, there is the renewable, because it is a very consistent source of renewable energy. The zero carbon, deregulation, U.S.-China competing to be at the front of the technology. So many things. It's like you put them in a blender and made a smoothie.
And it's called uranium. Yes.
Yeah. But a key technical detail of that is that the nuclear power generation has a very high upfront fixed cost. And therefore, a very low share of the cost is in the variable fuel cost. It means the price elasticity of demand for that uranium raw material input is very, very low. Sorry, very low.
Yeah.
In the sense that the price can move a lot in terms of raw material. It doesn't affect the end electricity price a lot, and that means that if we do get a secular trend of more uranium and more nuclear energy being created, higher uranium price is not likely to push back demand anytime soon.
Okay.
And that's why we think the thesis can play out for a long period of time.
Apart from the AI trade in the U.S., you're actually overweight when it comes to Chinese equities.
Yes,
as well.
We've been overweight China, and we've also added to that overweight. So it's one of
Where are you adding now in this market?
Still, broadly the China beta, we are positive on the trajectory of this ongoing bull market, and we think has further runway.
Yeah, so you mentioned China beta, if I'm not mistaken. So is that an index play?
Yes, in my portfolio, it's mainly an index play.
Okay,
yeah.
So you're overweight U.S., overweight. You can't be overweight everything. So what have you made less space for, I guess, is the question there.
The other regions in between. But I think the China story is very unique at this point in the sense that we think about the drivers as there are two groups of drivers. One group is the typical cyclical macroeconomic drivers, inflation bottoming out, growth, stimulus, etc. That's the usual suspect on the macro front. But we also think there's a set of emerging, I call it cool factors to this China rally.
No. Are you going to say Labubu? Because I'm gonna.
I will not name it, but I think it's driven by innovation, collaboration, a lot of it open source, and youth culture, which I think resonates with, millennial or Gen Z all over the world. I think that is more idiosyncratic and more distributed a driver of potential, earnings or exciting trends than the traditional, the macro drivers, which are more central and more tend to move in a more cyclical way. So this is, again, we think it's a more organic trend, more distributed, more idiosyncratic stories, more opportunities.
The cool trade.
The cool trade.
The cool trade.
The cool trade for the summer.
Does the cool trade include anti-involution? And do you expect that to translate into earnings? There are lots of doubts over whether or not it can deliver short term.
Yeah, well, I suppose involution is certainly uncool.
It's a cool word, though, I have to say.
Yeah. Yes, I don't know who came up with it. But I think that the original involution, this very, the cutthroat competition of it was probably a reaction to an earlier period in the economic condition where, deflationary pressure was relatively high and growth was relatively subdued. And now at a macro level, we see that trend starting to turn. And then these administrative measures by the authority to say, hey, let's be a little bit more rational with the competition. I think that certainly helps. And I think these factors are working together to potentially, boost the sentiment and maybe change corporate behavior as well. And then on top of that, you have this, better external environment, the cool factor we have just talked about, I think all of them are working together to form a greater thesis.
Taosha, thank you. Always cool. Taosha Wang, portfolio manager at Fidelity, joining us as well.
All right, just ahead, we'll be talking about President Trump's latest stance on Russia and how he's raising pressure on Vladimir Putin by setting a new, earlier deadline for a truce with Ukraine. We're going into the open here in Hong Kong, 13 minutes away, and we'll leave you with a look and maybe a public service reminder to, if you don't have to go to work, you know what, stay home. Black rainstorm warning is up across the city right now, and yeah, we'll see what happens. If you're out already, well, it's Cheap Tuesday, as they say. 12 minutes to the opening bell. This is The China Show.
I'm going to make a new deadline of about 10 or 12 days from today. There's no reason in waiting. There's no reason in waiting. It's 50 days. I want to be generous, but we just don't see any progress being made. It would be sanctions and maybe tariffs, secondary tariffs.
And that was President Trump there raising the pressure on Russia to reach a truce with Ukraine or face potential economic penalties. Jill Deeses, our news desk editor, is still with us to help us unpack. 10 to 12 days sounds awfully like 2 weeks, which is the favorite cadence of time?
Yes, that's right, David. Really kind of tracking in here with Trump's favorite unit of measurement, that about 2 weeks idea. I think, what we're looking at here right now is obviously this continuation of Trump is getting very frustrated with Putin. One of his big initial campaign promises was that he wanted to end the war in Ukraine pretty much, as soon as taking office. He had really kind of sort of trumped that up as being a big, signature part of his international policy. Obviously, he's failed to make that happen. I think when you're looking at the initial deadline that Trump ultimately set, that 50 days, that would have put us around September 2nd. We obviously didn't really see any movement from Putin there in response to that whatsoever. If anything, we actually saw, continued military actions in Ukraine. So I think that's, obviously wasn't really moving the needle much. Now, whether this is actually enough to, make Putin, reconsider, I think that's, maybe, something up for dispute here. But what we are seeing from Trump and then also from some U.S. senators, particularly Republican Lindsey Graham, is this idea that maybe the U.S. might try other economic measures such as secondary sanctions on countries like China and India that they buy Russian oil. Maybe that's a way that you ultimately pressure Putin. But yeah, we'll see what happens with this new deadline.
With that thought, though, of secondary sanctions, do you think Moscow's going to really react in any way? Because at the moment, the U.S. is engaged in really long trade talks with some of these nations that do buy Russian oil.
This is a great point, Yvonne. And we've actually talked to experts who would say that, this threat that Trump and others have made of 100% secondary sanctions is probably unrealistic. Maybe you start somewhere around 10 to 20% and try to ramp up. But yes, I mean, look, when you're looking again at those major buyers of Russian oil, China, India, as you mentioned, Yvonne, I mean, these are two countries that are pretty actively in trade talks. India trying to get something over the line before that August 1st deadline. And then you've got U.S. officials that are currently in Stockholm, Sweden right now, trying to continue negotiating a trade truce with China. The relations have actually been okay there. They're trying to pave the way for a potential Trump-Xi meeting by the end of the year. I mean, yeah, I think sort of like getting them involved in the equation creates a lot of new difficulties. So again, I think we're kind of left up to see, what actually happens and how Trump responds really at the end of this 10 to 12 days.
Jill Desos, thank you, our news desk editor there, joining us with the latest when it comes to Russia. In terms of your pre-market, we're certainly watching that here today. Seems like things have stalled in this equity rally of late. Maybe we're getting a bit of fatigue from all these trade deals and the tariff headlines and the like. So we are seeing pre-market is down in the Hang Seng. We're down about 0.4%. Wuxi Appetite, we're watching that very closely today.
Yeah, we're up 4% in the pre-markets. That's an earnings story. We'll unpack that in a moment on the other side of this break. Apart from that, it's quiet across these markets. And as Yvonne is pointing out, we're feeling a bit fatigued. We're pulling back. Volumes have been on the lighter side across some of the smaller benchmarks here in the city. Yeah, but an earnings story, a good enough earnings story is going to move the needle as far as at least this specific stock is concerned. The opening bell, 6.5 minutes away. Good morning. Welcome back. Just something to flag and something to watch over the next couple of days. And obviously, we have an absolute level and reason why we're tracking this in terms of just a specific objective here. So we're actually very close in margin debt, which is the fuel that fuels the rally. It's an indicator of risk appetite and sentiment out there. We're very close to topping the highs that we hit earlier in the year, and that takes us all the way back to the boom and bust days, as you can see in about May 2015, going into August, of course, when that drop came off. Just a note, that's of course when the PWC came out with that live briefing, which ignited this recent rally, and this is where we are going into the open today, Yvonne.
Yep, in terms of the pre-market and what we're looking in terms of analyst actions, anti-involution still remains one of the key themes here today. In fact, Morgan Stanley with an interesting note talking about what could actually benefit from this. So they're focusing on refineries, the likes of Sinopec, the likes of PetroChina, saying that they actually might benefit if they expedite the end of teapot refineries there. MTR also cut to neutral at Goldman. The open is next. This is Bloomberg.
Welcome back. You're watching the China Show. We're counting down to the open of trades. Weather seems to be playing a big part in the news flow today. You guys might have already heard and read about the floods in and around Beijing. That's number one. And here in Hong Kong, similar theme. We're not getting the floods, but we are getting a black rainstorm warning, which is, I believe, is the highest here. It's over the city right now. And yeah, it's certainly something to watch going into today. Certainly, flight disruptions and everything in between have been one of the things we've been tracking, given all the typhoons in and out of the city here, Yvonne. Apart from that, it's quiet out there where we wait for more progress or lack of it in Stockholm.
Yeah, I mean, certainly it seems like the U.S. is doing everything it can at the moment to try to have these trade talks continue, right, for a second day, and hoping for maybe some sort of extension by 90 days, right? They talk about freezing tech exports curbs, also talking about really stopping this stopover from Beijing potentially as well, according to the FT. So certainly there are, sentiment-wise, they're still keeping these talks going. But then again, the markets are kind of getting tired of this, right? That we haven't really gone anything much more than that. So certainly maybe beyond the EU-US sort of trade deal, as Stephen Ingles from Stanchart mentioned here, maybe this is the end of the kind of good news in the trade, and really what's really been lifting risk assets and leading to the weakening of the dollar. So, maybe we see that kind of rebound in the dollar, which is what we've been seeing of late. Maybe that can last a little bit longer here. We'll see, right? But here's how the market in Shanghai is doing. Pretty flat, as we say. It is quiet out there. CSI 300 is just above that 4,100 level here this morning, and we're still watching what commodities are doing. Certainly, they have been the play. Taking stock is talking about, this part of the market, which was certainly seen a laggard, is now almost like a winner. That is selling off here today when you take a look at steel, iron ore. But Shanghai crude is on the flip side up some 2%, kind of following what we saw in the oil price overnight, given some of these Russia headlines here, and President Trump urging or maybe changing that deadline for Russia to reach a ceasefire with Ukraine to 10 to 12 days from 50, right? So there was a little bit of that in the oil markets, certainly to watch as well. Pip of the boards, we're watching Hong Kong very closely. Yes, there's a black rainstorm, so we'll see what happens to trading volumes and the like here today, but it's not looking pretty right now. And yes, we're seeing some red across the board here, down about 0.5% for the Hang Seng. HS Tech is on offer here today, and MSCI China also as well. Interesting note from Morgan Stanley talking about anti-involution, right? You got to talk about the likes of the refiners. Those are certainly the ones that might be the beneficiaries of all this as well. So they're raising the price targets of likes of PetroChina, Sinopec, and the like. Tech, though, we've been talking about, it's been a really fearsome rally here. Things are kind of petering off. So Baidu's down about 1%. Xiaomi is also down by 1% here this morning. There's a 7.18 handle for $1 China. But, then again, not much really in terms of news. Maybe it's just consolidation overall. In terms of what news, though, that we did get, there is this sold subsidy when it comes to childcare. So 500 renminbi per child under 3. So it's probably one of the first maybe direct sort of ways of handing cash to consumers here. Whether it actually does anything to reverse the structural story of a declining birth rate in China, that's up for question here. But certainly maybe it might help the consumption side of things, right? That's usually the call that we're seeing here today. And we are seeing at least some of these sort of baby-related stocks, childcare stocks are rallying the prospect of that, like Nutria Dairy. It's up some 13%, Dave.
Yeah. What's up with Good Baby, though? Yeah.
Good Baby not doing too good.
Yeah, unless you're short.
But some of these were rallying quite a bit, even leading up to this announcement.
That's right. Yeah, I think late yesterday when the news flow came out. Fantastic. Yeah, we'll continue to track this. In fact, we're already getting a trickle of commentary coming from analysts out there. I think Morgan Stanley just dropped one in our inboxes. Citi's also put out a fantastic note, including Bloomberg Economics is another thing altogether. We'll get to that in a couple of minutes. On the back of that, though, and as Yvonne is pointing out, right, the levels we're trading at, 25,500 in the Hang Seng Index, 4,300 on CSI 300, I think 3,637 on Shanghai Composite. Who would have thought we'd be at these levels? But this is where we are. Turnover, 1.8 trillion daily, roughly speaking. Margin debt is nearing levels that we last saw 10 years ago. We're up 7 in the past 8 days as far as some of these other benchmarks are concerned. That's the context for the reasons Winnie Su is with us here, Asia Equities reporter, to talk us through what is exactly behind this rally that we're seeing.
Yeah, David, we're right now seeing this fantastic rally, especially when you look at just this month, right? The Chinese stocks are up about 5%, offshore, onshore, about the same. And also, that is really beating the major indexes. Topics only up about 3%, S&P 3.5%, right? So behind that, yes, we had kind of the tech and the DeepSeek stories earlier in the year, but most recently, luckily we talked about this anti-involution story a few weeks back already, but that is really ramping up and getting more attention. So with that domestic story unfolding and with this big Tibet dam project coming in, supporting more of those domestic kind of catalysts, we're seeing a lot more optimism around Chinese stocks. But also, when we look externally, obviously, there's the easing tensions between the U.S., China, and recently around kind of the H20 chips that the U.S. is allowed to ship to China. That also helped boost sentiment. So now we're hearing and focusing on kind of the trade talks going on between U.S. and China, with potentially that 90-day extension in terms of the trade deadline. So investors are really looking forward for that to be the next tailwind for Chinese stocks.
We were just firing that CSI 300 materials gauge, right? It's been up somewhat 18% this year. What are analysts saying about this whole anti-involution theme now? Is there still kind of legs to this, or are things looking a bit overheated now?
Yeah, the sector really is that star sector this year, right? It has been really underperforming the overall CSI 300 for the past 3 years. And this is the first year since then that we're seeing a turnaround. So commodity stocks hasn't been really the most exciting sector. But recently with that anti-involution, about the government really stepping in to curb the price curbs and to deal with the supply side of issues. So that helped investors to find some more confidence that we might be able to finally get out of that deflationary cycle that China is seeing. So we're seeing optimism around that area, and with the latest massive project in Tibet, most likely also supporting the demand in commodities. We saw commodities prices, be steel, coil, these all jumping in the past few weeks. So that really supported the stock prices around the material stocks. And with Goldman Sachs also upgrading the material sector yesterday to overweight, I think that means that a lot more upside is yet to be priced in.
Yeah, there we go. Kinger and his team are active in this team. Thank you so much. Hi to you guys, by the way, at Goldman, if you're listening or watching. I know you have the audio off most of the time. Winnie Su, thank you so much, our Asia equities reporter there. So Goldman came out actually, and Yvonne was just talking about this a couple of minutes ago, some changes to, I believe, MTR. That's not the point we want to make. The point on that Winnie just ended on there, right? So
Morgan Stanley.
Morgan Stanley and how they want to express anti-involution here.
So we mentioned about these several Chinese energy and chemical refiners is what they're thinking as their picks around this sort of theme here. So they do think that these efforts to curb excessive price competition will stabilize the industry, right? So and they're saying refineries worldwide, including those plants in China, most of which are actually loss-making, can actually benefit from it, right? So, yeah, we have to look at what teapot refineries are, but it's a nickname basically for some of these small independent oil refineries in China.
Teapot refinery, yeah. So what's your plan after uni? Teapot refinery. Once I secure funding from friends and family for that. This takes us into this other theme that we're tracking today, the big news in the afternoon session yesterday, with China outlining and detailing the plans here. There's further support and incentives to incentivize consumption and birth rates, $500 a year per child under the age of 3, in this latest bid to boost birth rates. It's certainly among the most extensive nationwide subsidies ever rolled out, and actually could benefit, get this, more than 20 million families annually. And, we're already looking at analysts chiming in on this and what this could mean. Is it this immediately boost the birth rate? Is the low-hanging fruit really more in consumption? How much does it actually help given the amount and the scale and the continuity, I think. And I think
it's the timing, right? They've held out for a while about actually putting cash into the hands of consumers. Right? We saw that with Hong Kong. Yeah. We saw that with the likes of Taiwan. And they resisted up until now, maybe September of last year, when we saw a little bit of that cash handout leading up to the National Day holidays and the like. So this is maybe the second time that we are seeing a little bit more of that sort of consumption boost, right? But does it actually work? I mean, the economists out there are crunching the numbers and talking about what impact this could actually have when it comes to growth and the like, right? I think Morgan Stanley had a quick number there. 0.1% of nominal GDP, so saving families about $14 billion annually as well. Citigroup saying, this is maybe more consumption focused than really about population and really reversing this declining birth rate. BE as well saying, look, it's going to aid to the suspending, but not sure about the birth rate. Yeah, the question is whether they're really going to spend all of it, right? And the way that Morgan Stanley phrased the number in the context of GDP, right? Families will be able to save, and hopefully they're then incentivized to then spend that money because of the savings coming out of the government. I think they said it's a consumption policy not so much a population policy, according to Citi here. And it's interesting, right? You're going to see these handouts, maybe more possibly. I mean, but it's a sign that at least they're trying to offset what some people said as headwinds in the consumption story, right? When you're starting to see these subsidy programs and the like start to fade in the second half, this might be a good offset.
Yeah. We're maybe just calling it something different for a different part of the population. In fact, I don't think we've showed this yet. The thoughts coming through out of Bloomberg Economics and how they actually think about this. Have we tried that yet? Not yet. So what they're saying is, to the point that I think some of the other economists have already rolled out, right? It will boost spending and not so much the birth rate. Subsidies are likely to...
likely too modest.
Likely too modest.
Yeah.
Okay, I was like, well, okay, is that an adjective? Too modest to stem a decline in new births, but still, it's a net positive more than anything. Can be useful in boosting sentiment and consumption. So, we'll wait to see how this becomes really a more tactical trade concretely.
It's certainly a step in the right direction, right? And Hong Kong's done something very similar, right? So, I received some cash this year.
Yeah? Congratulations. Happy hour on you. Yeah.
All right.
I like IPAs.
Well, it came in double, right? So
yes.
It was double rewarded.
This goes into the population issue, goes into the technology and how they're then able to boost production longer term.
Because you have the demographic issues, you have the shortage in factory workers. That's also forcing its heavy industries to really evolve, right? And really ramp up this integration of industrial robots. We saw that at WAIC. I mean, humanoid robots really dominated this year.
Boxing, backflipping,
cracking eggs.
Long-haul trucking is actually also one way that you're getting automation and technology boosting. You know, there's no need for humans, or at least less intervention from humans. You have the likes of several companies increasingly embracing advanced driver assistance technologies. In fact, Stephen Engo, Chief North Asia correspondent, hitched a ride on a big rig. Have a look.
Long-haul trucking on a vast network of expressways that surpasses even the U.S. in length is the lifeblood of China's sprawling industrial supply chains, not to mention the nation's booming e-commerce. Domestic express deliveries last year shattered all records, with nearly 175 billion parcels shipped. But there are growing pains, including a shortage of drivers.
Actually, truck driver is a very well-paid job in China in terms of a blue-collar job. But a young person, they'd rather to do the food delivery, which earn much less, but not to do the trucking job, because that is lonely and dangerous.
Today, we've hitched a ride with longtime truck driver Fu Tingfeng on the last leg of his solo 500-mile trip from Wuhan to Shanghai. Normally, such a journey would require two drivers taking turns. But Fu, for the better part of a year now, has been driving one of the 3,000 tractor-trailers in China equipped with an advanced driver assistance system from Chinese startup Inceptio Technology, which takes a lot of the driving of the 31-ton rig out of his hands.
When people are visually fatigued, for example when changing lanes, you think the distance between the vehicles is enough, right? Then you turn the steering wheel and it is normal to get a scratch. You can see on the screen that the radar and camera must have reached a certain distance, a safe distance between the vehicles, before it allows the lane change.
Driver assistance technology is facing intense scrutiny in China since a fatal crash in March of a Xiaomi SU7 EV that had its autopilot system turned on. When this ADAS system is engaged, Fu doesn't need to keep his foot on the pedals, as the rig handles acceleration and braking, as well as lane changes and maintaining safe distances. Inceptio has logged more than 215 million accident-free operational kilometers.
There's a lot of congestion ahead.
Lots of traffic.
Yes, but the system can handle all kinds of road conditions. Doesn't matter if there's a traffic jam.
6 cameras, 5 radars, and 1 LiDAR sensor help the truck navigate most hazards, and remote monitoring makes sure Fu is not over-relying on technology. So he's saying the sensor there up at the windshield will tell if he's drowsing off, and then the seatbelt will shake and the seat will shake to kind of wake him up.
The seatbelt will tighten on you. It would even shake loose a kidney stone, just like a massage chair.
Fu's employer, delivery company YTO Express, has 300 Inceptio ADAS-equipped trucks in its fleet and plans to add another 400 this year. At first, a bit skeptical, YTO now sees labor costs reduced by about a third and fuel savings of around 1 liter for every 100 kilometers.
It can eliminate some of the dangerous driving behaviors of individual drivers, which reduces risks to our shipments.
For the 46-year-old Fu, he says the advancements may just delay his previously planned retirement from the road.
I can drive this truck without getting tired even after working for more than 10 hours. I have a lot of energy.
Having arrived safely in Shanghai, Stephen Engel, Bloomberg News.
Yeah, shaking off the kidney stones.
Yeah.
We all need that.
That's one benefit.
Yeah, you can rewatch that in our past interviews on our interactive TV function, TV Go. Gotta love Steve on the field. You can also dive into any securities or Bloomberg functions that we talk about there and check it out at TV Go.
Welcome back. You're watching the China Show. Let's get you guys an update of the heavy floods we're seeing in some parts in and around Beijing. You have heavy rainstorms there. State media have reported have at least 30 people have been killed because of what's going on. President Xi Jinping is urging authorities to keep people safe as eastern and central parts of the country are facing a more wild weather. James Mager, our senior reporter, is with us out of Beijing. James, is it still raining?
It's been raining since about 10 o'clock last night in Beijing. Not particularly heavily in the city, but obviously up in the mountains, up near the Great Wall in Miyun, the rain has been very heavy. Up to half a meter of rain in some parts of that area. So, I mean, you're seeing some of the footage there, but it's obviously, if you're living up in the mountains north of Beijing, it's not great.
Yeah, we've been talking about the amount of casualties. I know search and rescue efforts are underway. What are people saying, or what's the response from the government been like so far?
So there's been a series of disasters in the past few years, and the government has been trying to get ahead of those by, with preemptive warnings about, the dangers that are coming. So last night, there was already warnings earlier in the evening that there was going to be heavy rains and people should be wary of that. And I think part of that is a reaction to a couple of disasters in 2023 in Beijing and in Zhengzhou earlier, where a lot of people drowned because there wasn't warnings. And so, sometimes they've gone overboard. There was a wind warning last year, which in the end didn't turn out to be anything. But I think in this case, that kind of preemptive warning is it's sort of preparing people for for what has happened. But there hasn't actually been a lot of discussion on social media about this, whether that's because it's being scrubbed or whether people just aren't talking about it is unclear. There's been a few stories in state media just sort of with the bare facts. So I guess we'll see going forward, how serious this actually is. It's probably likely there are many more than 30 people who have actually died. That was the toll at midnight last night. And generally in disasters like this, you tend to see that the initial counts are very just because rescue workers can't get into the most affected areas immediately. The initial counts are low. Whether this turns out to be as bad as the flooding in August in 2023 or not, we'll have to wait and see. But it's not great for the people of northern Beijing.
Yeah, James, thank you. James Mager there with an update, our senior reporter for Chinese Eco and Gov, and hope everyone is, of course, okay in those affected areas. And some other headlines around the world, we have to pivot. A New York City official says at least 5 people have been killed and several injured after shots were fired in a Midtown Manhattan office building. The victims include 1 police officer, and we're told the gunman was found dead on the 33rd floor of 345 Park Avenue, which houses Blackstone's global headquarters. Employees say Blackstone staff on the 32nd floor had pushed furniture in front of doors to barricade themselves during the attack. The Thai army says clashes with Cambodia continued until early Tuesday morning, despite both sides agreeing to an unconditional ceasefire from midnight. An army spokesman accused Cambodia of deliberately violating the agreement. Cambodia has not officially responded to the claims. President Trump says the U.S. will resume trade talks with both nations after they agreed to end the fighting along their disputed border, taking credit for the deal after threatening punishing tariffs. President Trump says the U.S., UK, and EU will set up food centers to ease starvation in Gaza. Trump says Israel has a responsibility to ensure aid reaches civilians. UK Prime Minister Keir Starmer backed the comments, saying Britons are revolted by images from Gaza and more pressure is needed on Israel to allow relief in.
Okay, we just talked about the floods, and it's still raining in Beijing, and particularly up in the mountains there. Also a reminder that here in Hong Kong, the Hong Kong Observatory has posted a black rainstorm warning. This is a view outside our windows here in central Hong Kong, and the advice from authorities is do not attempt to travel until the black rainstorm warning signal is no longer in force. It was hoisted about 40 minutes back, so keep an eye on the weather. Keep an eye on the shows. We'll get you guys updated on this as well. Plenty more ahead. This is The China Show. Right, welcome back. Childcare related stocks are in focus today, given, of course, the announcements yesterday. Nationwide subsidies, incentivizing families to go forth and multiply. We're looking at some of the related stocks. Some are on the way up. It's also worth pointing out that the news came, of course, right before, I believe, the markets closed. So there was some time for markets to position around this. And perhaps we are getting some profit taking in some, like Good Baby and now Health and Happiness International.
Yeah, so if you want to talk about babies, you could talk about anti-involution as well. So Morgan Stanley out with an interesting note about, we'll focus on the refineries, even the loss-making plants that might benefit from this anti-involution theme and could potentially really stabilize the industry. So it's still a mixed picture, though, but they did upgrade Sinopec, also upgraded PetroChina. Those shares are up 1% here today. So on the back of this, though, we're against sort of a pullback in equities here today. Most of Asia, Hang Seng is down close to 1%. We'll give you a market update at the top of the hour. Welcome back to the China Show. Here's a look at the Hong Kong skyline here. Looks pretty rough. It is a black rainstorm here right now, so it is certainly a warning sign to really kind of stay indoors and maybe see how maybe not go to work today. Just work from home and watch the China Show. Right? We got in early, so. But yeah, markets aren't doing too well right now. Hang Seng is down about 1%. It's really kind of what we're seeing, right? This sort of sinking feeling that we're feeling, that maybe reality is now sinking in about tariffs, right? And we certainly saw that, right? I think the euro certainly is a key indicator of that, the tumble that we saw overnight, Dave.
It was the steepest tumble since May 6th, single biggest day drop there. And it's not a coincidence that the move came on the back of course, progress on trade talks there, right?
EU and US.
EU, US, and all the bullishness that came into European stocks. The DAX hit a record, I believe, on Monday, briefly, if I'm not mistaken. And the euro's been trading at very strong levels, not just against the dollar, against the Chinese currency multi-year high. So there was, I guess, reason to reposition on the back of that news and reassess, I think, how this now looks from a fundamental structural perspective. If you do have a 15% tariff on most things, not all, from Europe, we're still trying to hammer out, of course, the details on that one. The other side, of course, is between U.S. and China, and the so far the takeaway there is maybe it's the best case is an extension.
And so it's still going to be a higher effective U.S. tariff rate, right, at the end of the day. And I think we're starting to really digest that. At first it was like, we've avoided all-right trade war. But even Stephen Ingles from Standard Chartered is saying that sort of tail risk reduction, that's already been priced in right now. So everything that was leading to the good news when it comes to risk assets, equity markets, even weakening the dollar, now we're seeing a turn and things are reversing.
Yeah, and we'll see how the Fed also manages to give some certainty around that, because for the longest time, the commentary that's come from the statement, the lack of commitment, was because of the lack of clarity around that. Now that it seems that, as the dust settles, what you're left with is a U.S. economy that has a 15% fence around it. What does that mean for inflation, growth, and everything in between? So, yeah, Fed's a big part of the conversation. This massive move up in the dollar, but that's more a euro. That's more a euro move than anything else.
It's a euro story, right? Because, as you mentioned, right, it's one analyst that says it. Europe avoided disaster but locked itself into an imbalanced, high-stakes pact with no clear exit ramp. The U.S. extracted every ounce of leverage. You have Mark Cutmore from our MLive team saying, look, this trade deal with the U.S. is not a win for the EU, and this euro weakness, they say, has some way to run. And we're starting to see that in positioning, right? And what these hedge funds have been doing of late with those net longs in the euro.
Yeah, going into this week, going into these talks, the data out of CFTC, the chart's going to show you this very, very shortly, is that traders the net long position on the euro was near the highest in about 10 months or so. This is a weekly data point that comes out. I think it's out every Tuesday or Wednesday at about mid-early week, so we'll get an update of this. But yeah, there was some temptation to reposition on the back of the news. On top of this, what else are we talking about? U.S.-China trade talks and childcare subsidies, I think, is a continuing theme, sub-theme.
Perhaps if there's something to trade today, it is going to be this whole childcare theme, the fact that they're giving out $500 per kid under the age of 3 to maybe help boost consumption. That certainly seems to be the reflection from many economists here out there, that maybe it's not population policy, but it's more consumption policy.
A friend messaged me this morning, and just to clarify, so the question was, are they giving $500 to each kid under 3? And I'm like, I don't think that's gonna move the needle. I don't think they'd know what to do with the money. But then again, that's also quite out of the box thinking. If that was
just buy some cool toys, right? The cool trade, as Taosha Wang from Fidelity
called it. If you bring up Labuba, I'm walking off the set right now.
You brought it up, not me.
Here we go. So we've talked about all the big things as well. In fact, let's unpack the China trade conversation. Stockholm, Sweden. You have U.S. Commerce Secretary Howard Lutnick there. Say it's actually President Trump who will decide if Washington and Beijing will extend their truce by 90 days. Lutnick was speaking with Fox News. Have a look.
They're talking right now, but the decision maker, of course, is President Trump. I'm sure the people who are speaking with China, we're going to go discuss with President Trump how he wants to play it. He's got an excellent relationship with President Xi. And I think we'll leave that to Donald Trump to decide how he wants to do it. Is that a likely outcome? Sure, it seems that way. But let's leave it to President Trump to decide.
Min Lo, our China correspondent, is here with us on what we are expecting in terms of day 2.
Yeah, look, we already have multiple U.S. officials telegraphing this potential trade truce, but some investors are saying if the two teams are sequestered away for 2 days, all they come up with is a trade truce, they're going to be a little bit disappointed. So let's see if they come up with even, a symbolic or a small agreement above and beyond that trade truce. Of course, President Trump might want to keep any big, juicy news for himself if and when he does meet with President Xi sometime later this year. But for now, we know that U.S. is taking every measure to ensure that the talks remain smooth. And one of the things they've done, according to the FT, is that the Commerce Department has frozen any export control rules that might derail those talks. And remember, just ahead of this, the U.S. has agreed to reverse the decision to curb the sale of H-20 chips to China. But FT reporting so far, the U.S. has not granted new licenses despite that. And this is actually something that sends alarm bells ringing for me, because I'm wondering then, is this just the U.S. posturing ahead of the trade deal, the trade talk to try to get better terms of the deal, or are they really going to fulfill their promises later down the line? And the other thing that's been derailed is also President Lai Ching-te's trip to the U.S. A stopover in New York and Dallas on the way to other South and Central American countries. This is, of course, a very routine way for Taiwanese and U.S. officials to meet as a workaround to the One China policy. Obviously, it's going to anger Beijing. This is according to FT reporting as well. But we heard from the presidential office in Taiwan saying that President Lai is no longer going to travel in the near future, citing typhoon recovery in Taiwan as a reason. But we all know what is not said here. It's the backdrop here, the sensitive timing that is potentially derailing that trip.
There is one snag. There was this trade court in the U.S. denying this effort to restore this exemption when it comes to the de minimis loophole.
Yes, so a trade court has now defended Trump's decision to basically strike down that loophole, which previously had exempted these small value packages from getting higher tariffs. And the Justice Department is saying that the decision from Trump was necessary and legitimate in order to prevent the flow of illicit drugs into the U.S. Bear in mind, though, yes, this is a small win for President Trump for now, but there is another set of legal challenges at the higher level, the Federal Appeals Court, that could still potentially overturn this. So for now, it's a win, but together along with, how the economy is doing, inflation maybe not as high as expected, the economy is still quite resilient, this could give Trump the confidence he needs to maybe hold out a little bit longer for a better deal with China.
Yeah, there we go. Min Lo, our China correspondent, they're really outlining, and all roads seem to lead back to a U.S. economy that is in a sweet spot where inflation hasn't quite showed up, at least worryingly enough, and slowdown signs, while are building, are not also alarm bells. In fact, just on that very note, we talked about this. The headline this morning, Yvonne, was a dollar rebound on the back of a U.S. market that was at a record high. In fact, when you look at the price action that we're seeing right now, again, Asia's down, but the U.S., again, U.S. futures are continuing to build on those gains.
It's a very interesting take from Taosha Wang from Fidelity, right? Where when you talk about U.S. exceptionalism, it's not so much the U.S. dollar, but it's more about U.S. equity markets. Because what you're talking about is that there's still the Mag 7 out there and this whole AI trade that is continuing to fire things higher for this equity market. So when it comes to diversification, it's not so much about stocks, it's the currency.
It's a dollar call, and that goes into all the big earnings that will take up mind space this week, right?
Yeah.
A lot of the Mag 7. In a couple of weeks, we have NVIDIA. In fact, have a listen to Taosha Wang, who joined us on shows this time in the last hour, and how she explained why they're still overweight on U.S. equities.
U.S. exceptionalism debate applies more to the dollar as a currency than the U.S. risk assets in general. And I think, we're still early in the earnings season, but we're seeing, generally positive earnings backdrop. Investments continue, especially in AI. The application, the investment, the technology continues in a very dramatic, very fast manner. I think there's still a lot of, strong long-term reason to be positive on U.S.
Let's now bring in our next guest, Alexis Crow, Dr. Alexis Crow, partner and chief economist at PWC US. Alexis, good morning from the Asia Pacific. Thank you for joining us. I'm not sure if you heard the comment there from our guest in the last hour talking about, again, there are enough reasons to still be in U.S. equity markets. And I wonder how you're framing this U.S. exceptionalism conversation, which up until a few weeks ago took a massive hit.
David, Yvonne, thanks so much for having me. Yes, the word exceptionalism, particularly when it comes to the economic situation, slightly perturbs me. And I like the word outperformance. When we think about economic growth in the United States relative to other advanced economies since the global financial crisis, we have outperformed on a relative basis. And I think there are a number of different facets to that. One is we've had really strong immigration and a really strong immigration policy. Two, you've had exceptional innovation, which of course hints at the Mag 7 phenomenon. And three, we've actually had an uplift in the United States, a direly needed injection of privatization when it came to looking back to the IRA. So going forward, I think we have to ask the degree to which any of these policy shifts might put us back slightly when it comes to outperformance. Of course, then the equity markets, I would say, we continue to see U.S. equity indices hit these all-time highs because investors want in on the AI trade. And I would say that we can say sectorially concentrated U.S. equities are highly in favor versus a little bit of European pharma, industrial products, some of the aerospace and defense, and then Chinese financials. So I think when you think about AI, it's the Mag 7 and it's the United States.
How do tariffs feed into that sort of view, Alexis? Because it seems like right now, markets are trading on record highs. They were saying we're getting these trade deals. We've stepped away from the brink of maybe the worst case scenario. But then again, we're still talking about higher tariff levels than maybe a few months ago with the U.S. Is reality finally sinking in?
Well, Yvonne, actually, I want to bring back in the comment that we just heard on DXY and thinking about the dollar, because the dollar has been down up until this month. The dollar has been down 10% since the start of the year. And so that's a piece where I would start to say investors are slightly concerned surrounding the outcomes of tariffs and some of the degree of institutional shifts and changes that we've seen in the United States versus, I would say, what we've seen in equity markets, which again is the tech concentration there. So as we look forward, I would say that, dollar strengthening off the back of this transactional moment that we've had in Scotland over the weekend. But the devil's in the details. How long will this stick? How long will it take to be implemented? Will it be ratified? I think are all questions. The other thing that we're watching the Fed, of course, we've got our meeting coming up this week. The other thing that we're watching, of course, is the extent to which these tariffs will pass through on inflation, and therefore the extent to which the Fed will need to hold rates at a higher for longer environment. And that, I think, is the key question when it comes to longer term growth in the investing outlook.
And, Alexis, you guys have a fairly unique window into how your clients are thinking about all these moving parts. And I think you hit the nail on the head there. Like, we don't know how long, well, for one, we don't know how long before tariffs will be implemented at 15% and how long they will stay at 15%. In a couple of months, we'll be a quarter through, if you think about it, Trump's second term. In 3 short years, that's it. And I guess the reason I frame it that way is I wonder to what extent U.S. corporates are maybe not putting anything permanent in place, but adjusting to the here and now. And does that view resonate with you and your clients in the U.S.?
Thanks, David. So we actually have our latest Pulse survey where 60% of our respondents of corporations have said that they're going to pass price increases on to the consumer. That was May. I would say that probably July, you're now looking at probably north of 75%. So we had obviously a tepid consumer, a very cautious price environment, companies being very, very shy about passing on a price increase to the consumer and reluctant. What we've started to see is that calculus is starting to shift. The question then becomes, David, one is, to what extent will it be a one-off price increase? The second question is, to what extent will that actually prompt a wage price spiral, which in an environment in when you're curtailing immigration numbers, that's also a potential outcome. The third piece is one that we also like to think about is what are some of the secondary impacts of these tariffs? So everybody's focused on the kind of the sexy automobiles and whiskey and motorcycles, but what about 232 and steel and aluminum and the inputs that go to construction and manufacturing and the housing market in the United States? So we've seen housing starts down in the US, and I think we're seeing developers with pencils down just because of the cost of inputs and the scarcity of labor.
And I'm just wondering, it seems like the Trump administration is using this tool of tariffs to try to accomplish many things beyond just reducing trade deficits, right? It's almost a way to even deal with national security issues, defense. We're seeing that with Russia. We're seeing that with Thailand, Cambodia, for example. I mean, it gains short-term wins, but what are sort of the long-term implications this could have?
We've heard it's the most beautiful word in the dictionary. So I would say that we have to think about the secondary and tertiary impacts of this. So again, a stickier price environment, right? Where again, the housing market is one clear facet in the United States where we continue to face a crisis of affordability in housing. The implications of a higher price environment in manufacturing as well are very clear. But when I think about some of the secondary impacts, one is, to what extent will other countries start to use this as a negotiating tactic and replicate and proliferate what the United States is doing? The rest of the world generally used to follow the United States because we set the rules. So that's my question, is beyond this administration, will that set into motion a preference for using either tariffs or non-tariff barriers to trade? The tertiary impacts are the ones on alliances. And obviously, we've seen some of the rancor from very notable, prominent European leaders over the weekend regarding the deal. And the long-term impact of alliances, I think, is the concerning one. That's on the downside, potentially for the United States, but on the upside, it's prompting what we call rest of world and the rest of world investing theme, where the rest of the world is generally getting on with it. Obviously, we saw this trade deal happen between the UK and India. You're seeing very clear efforts between the EU and Japan to cement their economic and commercial ties. You're seeing the same thing between Japan and Canada. And so I do think that the rest of the world is prompted now to get on with it. So that's a potential bright spot.
Interesting on the EU and Japan, Alexis, because we're used to talking about Europe and others, Japan and others, but not really Europe and Japan directly. And I wonder, has this, has the tide opened up opportunities now for direct links between those two?
Well, actually, David, we were chatting about my time in Japan, and one of the things that is a very consistent theme is the extent to which Japanese companies are chronically underinvested in the Eurozone. They have been, if you just look at FDI stock by destination, it's 100% in the US and then followed by the UK. So there are opportunities for Japanese companies to be present there. Likewise, I would say there are very clear opportunities for European asset managers and wealth managers to be present in the Japanese market. So to date, we've really seen that's been a US phenomenon, and US players really coming into the market and trying to win market share from even Japanese companies. But I would say that European asset managers can find a significant opportunity, particularly as there's an eye to diversify out of China.
Dr. Crow, thank you so much. Alexis Crow, the partner and chief economist at PWC US. And subscribers, of course, you can rewatch this interview and our past ones in our interactive TV function, TV Go. Make sure to check it out for there. We got plenty more to come. This is Bloomberg.
Right, welcome back. We're about 15 minutes into the cash market session. Declines in the order of about 1.5%. We're flat across mainland markets. Volumes in Hong Kong specifically are on the lighter side of things. We're looking at turnover, of course, as we have done over the past several sessions. That's number one. And number two, we're looking at margin debt, which has been building up onshore, which is actually all things equal, a good thing as far as the uptrend is concerned when that starts to build up.
There's too many things to deal with this week, right? Yes, we have, some trade deals, but U.S.-China trade talks are going to day two. You have a Fed meeting, you have BOJ, you have jobs report. I mean, people maybe are saying, look, I'm going to book some profits before all this events risk.
Yeah. Let's get Mark Cranfield's points plural, on what to watch this week. He joins us out of Singapore, where it just so happens, Mark, I think tomorrow you do have a central bank decision there as far as the monetary policy is concerned. Apart from that, or if that, what is top of mind for you, Mark, as we make our way from Tuesday throughout the course of this week then?
Well, it's not too surprising that people want to take a bit of a pause here. I mean, the market's been very strong. And as you say, there's a lot of stuff coming up here. All the big tech companies in the United States, their earnings, and people might be concerned that it's already as good as it gets in that respect, and whether the rotation can continue away from the States into other parts of the world. That's certainly a good reason for a pause. And if you look at, say, the MSCI Asia Pacific Index, which had this incredible rebound from the depths we saw in April, and it's trading so far above its 200-day moving average, the kind of positioning where people might say, okay, that's a little bit stretched by any measure, so we might want to pause a little bit there. This Fed meeting in particular looks like it's going to be a contentious one. So there are going to be dissenters, just a question of how many. Will it be 1, 2, 3? That's enough to make people a little bit cautious going into that. But then we've got the Asian earnings will be coming through after the Chinese tech companies. They'll be coming through in early August, and the big Japanese companies as well. So we'll probably find that the companies can get past this and people will start to feel better. But we've got to get through this week first. It certainly is the kind of thing where if you've got money on the table, you probably want to take a little bit off before you see all these big events unwind.
How should I be looking at this euro tumble that we saw overnight, Mark? Is it a start of something worse, given that it seems like we're past a sort of EU-US trade deal, and people are starting to realize, oh my gosh, these tariff levels are actually higher than we first talked about here. Is there more downside for the euro?
Not if you look at what the PBOC did today, and if you follow how the Chinese central bank has been doing its fixings for several weeks now, it is very closely tied to the way the euro is trading in relation to the dollar and the way the euro is in trading in relation to the yuan. And if you see they set the dollar yuan fixing a little bit higher today, but nowhere near as far as they could have done in relation to the move on the euro in the past 24 hours, which reflects dollar strength as well. So PBOC is keeping the lid on the yuan moves in relation to probably where they think the euro is going to go in the weeks ahead. So they obviously don't see a big downside for the euro. And you'll probably find that if you went across the board here for investors, they probably think this is just the same kind of correction that was needed in the dollar that you're seeing in equity markets as well. We've had some pretty strong trends, dollar selling off, euro gaining, equities moving as well. All those things, they're not going to go on every single day. People need to take a little bit of steam out of it. And that's probably what you're seeing, a good opportunity to reassess the euro. But the downside to it is probably going to be a bit limited when the United States continues to make it difficult for its central bank with some of the policies that are being imposed there. So that's going to play out in a slightly weaker dollar over time.
Mark, thank you. Mark Cranfield there, RMLI strategist, joining us out of Singapore there. We got plenty more ahead. This is Bloomberg.
Yeah, and part of our earnings coverage there is, of course, in Japan, where you have, by my count, 40-plus companies in the Topics Index. Nomura is one of the companies reporting today. We'll keep an eye on that. We're headed into the lunch break in Japan, and markets are doing this with a couple of minutes left in the morning session.
Family told them that he was a hero, and we admire him for putting his life on the line. This was his dad's only son. Now think about Jordan, my child, and it's unimaginable to experience a loss of this magnitude. And 3 other innocent civilians are also dead. 2 males and 1 female, and another male is seriously injured, fighting for his life in critical condition because of the violent, despicable attack. Additionally, the shooter is dead of an apparent self-inflicted gunshot wound. To be clear, 6 total tonight died, 1 including the perpetrator. And I'm sorry, 6 total was shot tonight, 1 including the perpetrator. No words can describe this act of evil, a man who takes the life of others who are innocent. And no words can fill the void that has been left by this tragedy. Our hearts break for the families and friends of the victims. We pray for the swift and safe recovery of the injured. The horrific crime reminds us all how easy it is to gain access to a gun. Gun violence has scarred so many neighbors and ripped apart too many families across this entire country. And we will continue the fight to do all we can to protect our city. But tonight we mourn for those who were killed, and we pray for the families as they go through this painful moment. And as I stated, 5 innocent people were shot, and the perpetrator was shot. We will continue to do what we do as a city, and that's fight to protect innocent New Yorkers. At this time, I'm going to turn it over to the Police Commissioner of the City of New York, Commissioner Tisch.
Thank you, sir. The information that I'm about to provide is preliminary and subject to change. At 6:28 p.m., the 911 call center started receiving multiple 911 calls for an active shooter inside of 345 Park Avenue at 52nd Street in Manhattan. What happened next is under an active investigation, and details are still coming in, but here's what we know so far. Surveillance video shows a male exit a double-parked black BMW on Park Avenue between 51st and 52nd Streets, carrying an M4 rifle in his right hand. He walks towards the building's entrance. That individual was seen exiting the BMW alone. The building's security camera footage shows the shooter enter the lobby, turn right, and immediately open fire on an NYPD officer. He then shoots a woman who took cover behind a pillar and proceeds through the lobby, spraying it with gunfire. He makes his way to the elevator bank, where he shoots a security guard who was taking cover behind the security desk. One additional male is shot in the lobby, per his own statement from the hospital. The shooter then calls the elevator, which opens in the lobby. A female exits that elevator, and he allows her to walk past him unharmed. He goes up to the 33rd floor, which is route and management, and begins to walk the floor, firing rounds as he traveled. One person was struck and killed on that floor. He then proceeds down a hallway and shoots himself in the chest. In total, we have 5 victims shot, our officer and 4 other innocent civilians, plus the shooter. The shooter is believed to be Shane Tamura, a 27-year-old male with a Las Vegas address. The vehicle he exited is registered in Nevada to Mr. Tamura. Inside of that vehicle, officers found a rifle case with rounds, a loaded revolver, ammunition, and magazines, a backpack, and medication prescribed to Mr. Tamura. The vehicle was searched by our bomb squad and found to be clear of any explosives. The initial investigation shows that Mr. Tamura's vehicle traveled cross-country through Colorado on July 26th, then Nebraska and Iowa on July 27th, and then in Columbia, New Jersey, as recently as 4:24 p.m. today. The vehicle entered New York City shortly thereafter. According to our law enforcement partners in Las Vegas, Mr. Tamura has a documented mental health history. His motives are still under investigation, and we are working to understand why he targeted this particular location. 345 Park Avenue is a commercial office building whose tenants include the NFL, Root and Management, KPMG, and Blackstone. At this time, 4 of the 5 victims are deceased, including our NYPD cop. Our officer was transported here to New York Presbyterian along with 1 male civilian, the lone shooting survivor, who is in critical but stable condition at this time. 2 other civilians, 1 male and 1 female, both deceased, were brought to Bellevue. The 4th civilian is a female who was found dead on the 33rd floor of the location. Additionally, there are 4 other victims being treated for minor injuries sustained in their attempts to flee the scene. Victims' names are being withheld at this time, pending family notification. Officers from our Special Operations Division are currently conducting a secondary sweep of the entire building. I want to be very clear. We believe this to be a lone shooter, and there is no longer an active threat to the public. But today, 4 innocent victims are dead. Among them is NYPD police officer Didarul Islam, 36 years old, 4 years on the job. Officer Islam was married with 2 young boys, and his wife is pregnant with their 3rd child. He's assigned to the 4-7 precinct in the Bronx. He was doing the job that we asked him to do. He put himself in harm's way. He made the ultimate sacrifice, shot in cold blood, wearing a uniform that stood for the promise that he made to this city. He died as he lived, a hero. I want to extend my profound sympathies to all of the victims and their families, and to the brave NYPD cops who today lost a brother. There are still many questions that we have to answer, and we will answer them. But for now, our city is in mourning for the innocent lives lost. May their memories be a blessing. Pat.
Patrick Hendry, President of the PBA. This is a devastating night for our city, for our police department. Pure evil came to the heart of our city and struck innocent people. And one of our police officers who were protecting those people. We lost 4 people tonight in our hero brother who gave his life for this city. He was a hardworking police officer who was proud, we know, from hearing from his family, to put on that uniform and shield of a New York City police officer every day and went out and did his job. And he went out every single day to provide for his family, whether it was overtime or whatever he had to do to provide for this family. That's what he did on a daily basis. And his family is devastated. A wife losing a husband who provided for that family. A father who's not going to see his son again. And our hearts of every New York City police officer right now is hurting. We're hurting for our brother police officer who we lost. We're hurting for that family. We're hurting for all the victims and hurting for all the families of the victims. And we're all asking, why? Why did pure evil come here? And we know our police department and our law enforcement partners will work tirelessly to get those answers. But now our job as police officers is to be there for this family, to support them in any way that we can, to come together as a city, to be there for these families of the victims. And we will continue to do that, because that's what New York City police officers do. And we're going to continue as police officers to go out and protect this city, because we know that evil can strike at any time. But police officers are willing to risk their lives to protect everyone in this room and protect everyone in this city. So we ask all New Yorkers to pray for our police officers' family, to pray for all the victims and their families. And we need to stand united going forward. We thank you for covering this story.
We are also joined by our federal partners from the ATF and the FBI. I want to give an opportunity to our partner in the FBI, a special agent in charge of the New York City Fields Office, Chris Rea.
Thank you, Mayor. First off, on behalf of all the men and women of the FBI, I'd like to extend my deepest condolences to the victims of this senseless tragedy. And also personally, I want to extend my condolences to the police commissioner. And just please know, ma'am and Mr. Mayor, that you have the full force of FBI New York and the full force of FBI to get to the bottom of the answers. Upon learning of the incident this evening, FBI agents immediately deployed to the scene to assist our NYPD partners. While this remains an NYPD investigation, the FBI's New York office stands ready to provide any and all resources to assist our partners. Initial checks of our internal systems have not revealed any information about the subject. But when and if more information becomes available, we will share what we can, when we can, with the public. Thank you.
Okay, we're going to do some on-topic questions, folks. We'll start with CNN, please.
Just a quick question about the police officer. When he was standing in the lobby, did he have a chance to fire his weapon at the shooter, or was he completely handled? And also, when the shooter got to the floor, approximately how many people were on that floor and what were they doing?
All of this information is under active investigation. Videos are being reviewed. And as this investigation continues to unfold, we'll be able to answer those questions. But right now, it's an active investigation.
Miles Bloomberg.
Commissioner, if you could just talk about, he was working paid detail there, to people who might not know what that means, and was he the only officer working that paid detail there?
I believe that there were 2 officers in the building working pay detail assignments in different parts of the building.
And what is that if people, may say he's on his day off working in a uniform?
Paid detail is a program that we have set up at the police department that allows companies to hire officers in uniform to provide extra uniform security.
Commissioner, did she, based on interviews with witnesses, did she say anything at all? And secondly, did he leave behind any manifesto, any writings or paperwork?
I already described what we found in the vehicle, and it's too early in the investigation to discuss anything more.
Thank you. Is there any indication that he had any prior connection to New York or to the real estate industry? I believe that's the business group he's in.
As I said, too early in this investigation to tell, but nothing that we have seen preliminarily.
Commissioner, can you talk about what the medication was that was found in the vehicle?
I cannot.
Can you speak about any prior law enforcement contact you may have had?
I cannot, other than to say that our partners in Las Vegas made us aware of a mental health history.
Yes, Steve? Wilson Durham?
Just what I said already. It was an M4 rifle, and we also found a revolver in the vehicle with ammunition and magazines. He did have a license in the state of Nevada.
Was there any intelligence indicating that this location was at risk beforehand? And are you considering this a targeted attack or an attack of terrorism?
At this time, it's too early in the investigation to tell.
Thank you, everyone.
All right, this press briefing just wrapping up here on the back of this deadly shooting at the Blackstone Tower in Midtown Manhattan. What we are learning this evening is that 5 people are dead, including a New York City police officer, and the suspected gunman died of a self-inflicted wound. Now, the shooter has been identified as 27-year-old Shane Tamura from Nevada. We just heard from the New York PD's Commissioner Jessica Tisch there saying they believe that this is a lone shooter here, and New York City Mayor Eric Adams and city officials, they're talking about this tragedy in Midtown Manhattan there. So surveillance video did show a male exit a car carrying this M4 rifle. He entered into this lobby of this building that housed the likes of Blackstone, the NFL, KPMG, and immediately shoots a New York PD officer and proceeds to spray gunshots before calling the elevator and firing rounds on the 33rd floor. Tonight, they are still working on a motive, but that is the latest that we're getting from this deadly shooting in Midtown Manhattan tonight. We're going to continue to chase and see what happens here, but please keep it here. Putting more ahead. This is Bloomberg.
President Trump says he will shorten his timeline for Russian leader Vladimir Putin to reach a truce with Ukraine or face potential economic penalties.
I'm going to make a new deadline of about 10 or 12 days from today. There's no reason in waiting. There's no reason in waiting. It's 50 days. I want to be generous, but we just don't see any progress being made. It would be sanctions and maybe tariffs, secondary tariffs.
John Herskovitz, our East Asia government editor, is with us right now from Tokyo to talk us through, John, the specific details of this plan to punish Russia if it doesn't comply.
Sure. What Trump has floated before are secondary tariffs going after the people who buy, the countries who buy Russian oil. The biggest purchasers are countries like India, China and Turkey. So it would be finding ways to punish these countries that purchase the oil, and also perhaps going after some of the Russian facilities, the ships, the places that make the oil, and also see if the U.S. can get involved in financial transactions that are part of this. And the one thing about this is these are the so-called secondary sanctions are very difficult to enforce, and they also could interfere with trade negotiations that are going on with India and China. So timeline is shortened. It's shown increased frustration. It's this diplomatic and economic pressure that Trump is trying to apply. The U.S. Congress, specifically the Senate, is looking at doing something similar to increase the economic pressure. So the tariffs could go as high as 100%. We have the shorter timeline, and it's a little bit of extra oomph from Trump trying to get Putin to change.
And will he, is the question, John. I mean, what has Putin done in response, and how will Russia likely react?
Sure, we haven't had an official response yet to the latest move by Trump. And since Trump first announced the 50-day deadline for the ceasefire, Russia has responded by increasing its attacks on Ukraine. It seems that Russia feels that it can withstand anything that Trump can do, that it doesn't see as the U.S. being thoroughly committed to making good on its threats. And it has maintained its hard, fast ideas when it comes to Ukraine about keeping the territory, seeking a change of government. And we haven't seen any real indication that Putin is going to back away from this war or accept a ceasefire.
All right, John. Thank you, John Herskovitz, there, our East Asia government editor, with the latest. We are just getting a tweet, or I should say a post, from the president on the back. What we're hearing here is about this whole U.S.-China, of course, trade discussions that are going on for a second day. So the president is saying this now, this evening. The fake news is reporting that I am seeking a summit with President Xi of China. That is not correct, he says. I am not seeking anything. I may go to China, but it'll only be an invitation of President Xi, which has been extended. Otherwise, no interest. So we're still trying to clarify whether it was an invitation from the Chinese side of things. But yes, here we are hearing that, maybe the summit may not take place after all. But we have seen efforts from the Trump administration, at least, to try to smooth their way into getting some sort of summit between the two presidents.
Yeah, and some of the conditions that were not even being considered a few months ago are certainly now on the table, right? I know we've talked at length about the chip curbs being relaxed in China and everything in between. So it does seem things are pointing in that direction. But as Yvonne was just pointing out there, it's unclear whether a formal invitation from the Chinese side has actually been extended to the U.S. president. The U.S. president has certainly suggested that an invitation had been given by President Xi here.
Yep, so we'll update you once we get a bit more clarity on that front there, but that is what the president is saying here this evening in the U.S. Let's flip the boards and really talk about what we've been talking about, right? The whole market impact of this global trade war and what the president has unleashed in April really shook investor confidence in the U.S. economy so much that it sparked a stampede out of the dollar, and much of that money has washed up in developing economies. We're seeing a bit of a reversal of that of late. But let's bring in Marcus Wang. He is Bloomberg's EM macro strategist and joins us from Singapore. Marcus, you take a look at how EM equities have done. I mean, it's up 17% in dollar terms this year, and really about to double the advance that we're seeing in the S&P 500. Do you really see something different this time around? Is this really a once-in-a-generation opportunity?
Yeah, I mean, that's a term that's been thrown about quite a bit. I think it's also recognition that, from 2010 to around 2023 was really the lost decade for emerging markets, a decade we saw, returns, dismal returns, especially relative to the S&P 500. We saw quite a few EM bonds, bond shops shutter, as well as, quite a lot of outflows from EM funds in a sense. But, this has really been quite a seismic change, as you mentioned, after the April 2nd Liberation Day, when people started to really question US exceptionalism, and the dollarization concerns really escalated. So essentially, the nutshell of this is that the dollar is just great for emerging markets. Firstly, a weaker dollar allows debt denominated foreign debt for EM countries to improve, so i.e. better external balances. A falling dollar essentially is good for the dollar carry trade, and this has also been accompanied by a fall in dollar volatility. So the dollar-funded EM carry trade has been on a tear. In addition to that, we've also seen EM local currency bonds come about as quite a favorite among a lot of fundies that we spoke to, essentially because a weaker dollar means stronger EM currencies, and this has allowed a lot of central banks, especially those in Asia, to cut rates. And last but not least, as of course, if a dollar-funded investor, a fall in the dollar is just good returns, good FX returns for your portfolio.
Yeah, there we go. The bonuses are mounting. Is this a blip in the matrix? Is the question. Marcus, thank you so much. Marcus Wang there, our EM Markets macro strategist. You can check out for our viewers and Bloomberg clients, of course, and a big take for the full detailed piece on this once in a generation, really, occurrence that's taking place here in these markets. Something that doesn't also happen very often. In fact, the first one this year is this rainstorm warning.
It's the highest rainstorm warning that we're seeing in Hong Kong, and really effectively shutting down the city, and twice really in a week after what we've been talking about here the last couple of days, this typhoon that happened over the weekend as well. 100 millimeters of hourly rainfall has been posted. That's it for us in the China Show. Stay dry.